I'll just wait for the perfect time to invest. Maybe when prices drop a little, or when the news feels safer.
That's what a lot of people say. But here's the truth, the perfect moment doesn't exist. Even the most successful investors in the world, with decades of experience and huge research teams, can't predict it consistently.
Really? I thought experts with data and analysts would have an advantage.
They do have an advantage in research, but not in predicting exact timing. Markets move because of thousands of unpredictable events, elections, wars, new technologies, interest rates, or even a single tweet. It's impossible to control all that.
So if they can't do it, what chance do I have?
Exactly. The good news is you don't need to time the market to succeed. In fact, trying to wait for the perfect entry point usually leads to frustration and lost opportunities. Most people end up watching from the sidelines and never start.
Why is waiting so risky? Isn't it better to avoid buying when things are uncertain?
It feels safer, yes, but history shows it's one of the most expensive mistakes. Think about it, the biggest gains often happen right after the scariest crashes. If you're waiting for the fear to go away, you'll miss those explosive recovery days.
Explosive days? Can you give me an example?
Sure. Imagine the market drops 20%. Everyone panics. Then, within just a few days, it bounces back by 5% or 10%. Those days often account for a huge part of long-term returns. Miss them, and your results collapse.
How much difference could a few days really make?
Studies show that if you missed just the 10 best days in the market over the past 20 years, your total return could be cut in half. 10 days, out of more than 7,000 trading days. That's how concentrated the gains are.
That's unbelievable. So just being out for a few days could destroy decades of growth.
Exactly. And here's the catch, those best days usually come right after the worst ones. When fear is highest, opportunity hides in plain sight. If you're out of the market because you're scared, you miss the rebound.
So basically no one rings a bell to say this is the bottom?
Correct. There's no announcement. That's why the smarter approach is not to chase perfect timing, but to stay invested. It's called time in the market, not timing the market.
But if I invest when prices are high, won't I lose money if they fall?
In the short term, maybe. Prices move up and down all the time. But over years, the overall trend has always been up. By staying invested, you allow compounding to work. Your returns generate more returns. That only happens with time.
So what should I do instead of waiting?
Use a simple strategy called dollar cost averaging. Invest a fixed amount every month, no matter what. When prices are low, you buy more shares. When prices are high, you buy fewer. Over time, you smooth out the ups and downs.
It sounds less stressful than guessing.
Exactly. It takes the pressure off. No more sitting in front of charts wondering, is today the top or the bottom? You just keep going. It's discipline, not prediction.
So if I start now and stick with it, I'll be better off than someone waiting for the perfect entry?
Absolutely. The earlier you start, the more time your money has to grow. Remember, compounding is like a snowball rolling downhill. It starts small, but given enough time, it becomes huge.
That makes sense. Waiting might feel safe, but it actually costs me years of growth.
Exactly. There's an old saying, the best time to invest was yesterday. The second best time is today. The longer you wait, the more you lose. Consistency beats perfection. And if you want more simple, proven strategies to follow, make sure to hit follow and check the link in bio for our monthly stock picks.